through the all right, so basically on the Nasdaq 100, what we're going to do is we're going to examine what the peaks were and how they had started through here and the wind-up process that had occurred so far in the calendar month of January. This is where we're at within the cycle up here at these trend lines. And what I'm going to ask, where does, so when you got the high, when you hit the peak of the highs, even over here, you had pulled back and you would get small pullbacks, but if you look at where the pullbacks would occur, they would get that major support line, they'd walk them to their highs, pull them back, but stair step them back up or test them, but pulled it back. This is the ultimate high of this full evaluation during 119, and Apple, FOMC meeting, and many other contributing factors around the world have played a major key in this current overbought, exhausted area that we're starting to see. So when we blow up this part of the chart, we can clearly see a clear picture within this trend line structure of what's going on here. So MMT, explain to me what your observations have been over the days, please, if you don't mind.
Is that a question to me, Mario?
Yes, it would be. And what you have seen in the tape that you find very irregular versus regular.
Well, over this last month, the futures, Nasdaq futures, are making new highs every day. What I have noticed, though, in the late week, this week, the difference in behavior, how they do that. They used to start the day and just every single bar would establish a new high and close the day with the new high. And then the next day will come in and they will open the market and they will repeat again and again. This last week, however, they have changed, or let's say the pattern has changed. They still establish the new highs, but the daily behavior is changed. They start the day with the high, and then they retrace, and there is some fluctuation. It's not a one-directional movement. And then at the end of the day, they will run up to the daily high, and then the market close, and the next day start with the gap, which means that overnight they would establish a new high. And again, that would run down, and towards the end of the day, will run up to that daily high. And that is the new pattern that I have noticed.
Okay, and so basically what I'm hearing from you and what you have clearly demonstrated in an A plus is how those higher exhaustion peaks can get to the upper target, but what you have found out though, that as they make those higher targets, they're generally done in an overnight opening futures gap up to accomplish it through the whole monthly cycle. Is that
right? Right. So we do see during the day a bi-directional movement. I guess that's the point I was making.
That's right.
Versus what previous to this week we have seen, it's one directional movement, mostly up.
Right. Exactly. And one of the things that we would like to ask you is that when you take a look at the 60-minute chart here, you can see that other various movements down in the 60-minute were just shallow movements as well. And not only that, every now and then, like you said, you would get that pullback like that, but then they would walk them higher to those higher highs you said. And they would do that during to get to these peak levels. This is where the highs are to current. And we know beyond a reasonable doubt that today's 60-minute reversal bar is one that has not been. And you have to have these 60-minute reversals as like the 60-minute bar that was done over here. Some of these were done on announcements, FOMC, and some were Apple during the week in these 60-minute bars. But nonetheless, they still need to be taken out, and that's these bars. These up bars that you were talking about here is that the reversal highs have to so you're finally at the peak, and you're getting a 60-minute reversal as you did the previous day 60-minute buy bar before they finally did that overnight. And that this neckline is where the 2440 would have to break clearly to get down to where they started the process on 117 and 118, which is right here, is where they started the whole behavior process. They would pull back. There were times to exit. Then they would break it higher. There were other times in here that were also exitable, but then they kept doing the same pattern as described in the MMT's experience that's in the school, that the longer neckline at 2420 is that you have to break these major lines on the way down in the same volatility reversal bars as reaching the top of that exuberance level. And we would take a look at where the 2380 lower level of this major top, that's the distance that we'll mark it at, because that's where they started the 60-minute breakout and the 60-minute test that closed above it. So I would like to ask you another question. Since you've noticed the extreme highs, have you noticed that they didn't really make those highs during your actual trading day event? But like this big green bar here was an Apple event, and it was really after hours. You hear me? But it starts out the day like that, and some of the FOMC bars over here meeting from yesterday. And you could see where the exuberance increased. Is that what I'm hearing?
Correct.
So the other part of that is so you believe that a lot of this type of movement was manufactured to get to the high reversals like most bull rallies do, and they have pullbacks, and you're starting to see proof of that now. Is that true or correct?
We have seen a pullback on a daily hours.
Right.
Which we have not seen for quite a while, more than 3 weeks. I think we have straight run up every day. I think over these 3 weeks there was 1 or 2 days when you actually have seen some pullbacks, not strong pullbacks, but some pullbacks, not even to the support area or the opening of the day, but some pullbacks, and they were rare and far in between. Which is right now, this week, we do see, some of the strong pullbacks. And as you correctly notice, the big green bars that we see right now, those that out of ordinary, those are on the news.
That's exactly right. So headline event, news, and all of the things have played within that top cycle up here, hasn't it? Now, notice how one peak, the second peak, and you make the final third peak within that structure that you've described herein. Do you see that? And this is part of that behavior that you have just described, that diagonal trend line from this top. Here's an X here, and here's an X here. because this last high wasn't higher than that one. So you had this peak over here. That was peak 1, pull back. That was peak 2, shake out. Peak 3, which you can't count it because wasn't above that high. But here is peak 3. And at the third peak cycle, we look to see where the pullback would be greater in value than any of these other pullbacks so far at 9:32 a.m. Pacific Standard Time, 12:32 a.m. Eastern Time, 1/26/2012, and we will call this the Nasdaq 100, the E-mini. We will call it the Nasdaq comp. We'll call it all combined. We will also say that when you break that 50-minute period moving average, the MMT is described. This is when you would like to see that second 60-minute reversal confirmation in the same length down to that support level. Just as you've seen that same 60-minute bar here, and that 60-minute bar, you need the follow-through, and it needs to be after the lunch hour, probably, and you need a clean break through this point, because then you start getting down here where it all started, and that there would be a calendar monthly beginning reversal peak high within the calendar 2012 January intraday, which is 126 intraday high on the Nasdaq comp again, and the Nasdaq 100 intraday high. And when it made the intraday high, that's where you start getting that minus debit 6.96 into the tape. And the exchange model cannot be one way. They have to get paid on transactions on down days, so that transactions are being made, so that they exist that way. And you're at the 50-minute moving minute period average. And once again, the update has been given to all MMTs and everyone involved to know the peaking cycle to that reversal. If it will be confirmed moving after today, moving through the calendar month and into February now, is that February would say that you would have some more to confirm it, though. February would be proven that you would have bigger down days at the highs on every high, and that the peak, you don't see it again. You don't even test it again. And number one is that the high reversals increase in value in that direction of the market to confirm that. They start like this at peaks, let it be known. And they start that way in everything. Let it be known. Thank you, MMT, for your cooperation. Please watch this bottom here, because we would look at getting very aggressive on a clean break at the beginning of a bar that may or may not end up like that, but we're at that support level.